Yo, what's going on, guys? It's Standout Trading. In this video, I'm going to be updating my Elliott wave analysis on Bitcoin. I'm going to be going over my macro Elliott wave counts that I'm looking at. I'm also going to cover some alternate counts so we can be prepared for different situations to play out. And then we are going to cover the short term, where this thing could potentially bottom at before we get some type of relief bounce to the upside. Also, if you guys have not checked out my Twitter, it's Standout Trading. I go over stock plays and crypto updates throughout the week. So first I'm going to go over what we previously talked about on June 13th. Sorry I have not been active the last few days. I have recently been sick, but I am getting over it, so hopefully I am back for now. But previously we talked about how Bitcoin was headed towards 16.9k to around 21.7k. In that area, if we start to see bullish confluences at those lower areas of support, then we could see a reversal back to the upside for this wave X. The current price of Bitcoin was a little below 23,000. Now if we do take a look at the Bitcoin price chart, it has cracked below $19,000. So I believe that anywhere in this area from 16.9 to 21.7k, we still could see this reversal back to the upside for wave X before setting that next leg to the downside. Now you might be thinking, well, Dan, what happened to the ending contracting diagonal count? Now, if you guys have not really kept up with my videos too much, but you remember checking in a few months ago when I presented this count, basically what needed to occur for this count to play out is we would need to see a move down to $26,000 to $30,000. From that area, we would need to see a multi-week correction to take it up to around 33 to 37k, at least 33,000, because wave 4 must overlap into the price territory of wave 1. So if we take a look at the Bitcoin price chart, you can see that from this area up here, which was around $48,000, we did get that huge reversal down to around 26,000. We did get that multi-week correction back to the upside. It did not overlap into the price territory of wave 1, and then we just saw this thing crash to the downside. So this count is totally out of the picture. Though it did follow it down to 26k, it doesn't just have to continue to follow this count. Markets are changing, so sometimes things get a little clearer as these counts start to play out and we get more price data on the chart. So now that that count is out of the picture for me, I believe that we are in a bigger degree corrective wave. So here are the two different counts that I'm looking at. This one shows that we get a reversal up for wave X, but then it still does head towards lower levels. Now this could fall anywhere from around $10,000 to around $17,000 is going to be the first target. If it does start to crack through those levels, we do have areas down near $4,000 to around $6,000. So it really depends how these upper levels hold. Once we get this X wave in place and then it does start to head lower for wave Y, we can get a clearer picture of where we think this thing could really reverse at before going on to set that wave 3 to the upside. Now, I do have another count which I recently discovered over the weekend. Now, I dove into these charts for a few hours and I tried to find the count that has the best look when viewing this chart as objectively as possible, and I really do like the look of this count, which does correlate with my NASDAQ count. If I do put this on the weekly time frame and zoom out, you can see that we had cycle wave 1 and 2 complete back here, and this entire move from 2011 all the way to 2021 was just an extended wave 3. Now there is something called time proportion where waves of the same degree should be in the same general time frame. So if you've heard that before, you're like, well, what the heck is this? That makes no sense for this to only be 1 year and then this to be 10 years. Here's the thing. Within an extension, usually it will be out of proportion in time and size compared to the other waves. So this is the only exception for proportion in size and time when you do get that wave 3 extension. Now, wave 1, 3, or 5 could extend, and actually 2 waves could extend. But here's the thing, if there's going to be 2 waves that extend, it must either be waves 1 and 3 or waves 3 or 5. It couldn't be waves 1 and 5 because it violates an Elliott wave rule, which is wave 3 would be the shortest wave, which is not allowed. But anyways, this count shows that cycle wave 3 did top out. We are in a 1 to several year corrective wave for this cycle wave 4 that is the typical duration for a cycle degree wave, and basically it's just putting in this primary wave W. We should get that reversal back up for primary wave X before falling down for primary wave Y, which could hit this lower trend line, which may end up being around this area of support right here. If we extend this over, we could see maybe that's around $10,000 to around $13,000, and then it reverses up and goes towards all-time highs for cycle wave 5. I don't really have any targets for this. It is a little bit hard because it doesn't really respect the log scale fibs or the linear scale. If we were to take this off of the log scale real quick and we bring up up the 786, you can see it's already approaching that. But then if we put this on the log scale, you can see the targets are down near $1,200 to around $6,000. So it would mean for a bigger crash to come in. So it definitely is possible that it does hit these lower levels for cycle wave 4. It just seems a little unreasonable that we do get that low, at least now. So both of these counts do show the same thing, that we are in this double zigzag to the downside, and there is still lower levels to come, but I believe that we are going to see an unexpected bounce very soon. Here's the reasons why I believe that. If I do go on the daily time frame now, I'm going to go over this corrective wave that we have to the downside from all-time highs. So we're in this double zigzag structure, which is when you will get a three-wave move in wave W and Y. Usually will unfold as a simple or a double zigzag. Rarer case, it could be a triple zigzag structure. We are in this final wave Y. What occurs after a double zigzag structure, so you will have the three-wave move down for wave W, 3 waves back up for wave X, 3 waves back down for wave Y, and we would label this move as wave W, X, and Y. And what will occur after that is either this thing will likely go to all-time highs, or it will just make another 3-wave move for a wave X and then down for another wave Y to the downside. So I believe that this will just be a wave X before setting wave Y to the downside, but we are completing this wave W very soon. Reasons being, if we do head to the lower time frames, we have 5 waves to the downside at the minuet degree. We have this 3-wave move back up for wave B. Now we are in this 5-wave structure to the downside for wave C. This is called a simple zigzag pattern, which is when there is 5 waves down, 3 waves back up, followed by another 5-wave structure to the downside. When this occurs, you will either see a relief bounce for a wave X, or again, it will head to all-time high, same as the double zigzag structure. So we are basically completing this wave C right now before we get this relief bounce. And in this wave C, we can count out wave 1, 2, which was a double 3. It went down for wave 3. Wave 4 could be this running triangle pattern. And now it is headed down for this wave 5. If we do bring up the RSI indicator, it is making bullish divergence from this low to the new lows that it is making, which is when it makes a lower low on the price action, whereas on the RSI it does make a higher low. This indicates that momentum to the downside is weakening, and we should get a reversal back to the upside. So I think that a lot is setting up for this thing to kind of retrace back to the upside. Both of these counts that do have very nice looks are showing that this move down is nearing completion, and extreme fear should not last for too much longer. Now, the targets to the downside still remain from 16.9 to around 21.7K. So anywhere in this little pocket, I believe that is where we do get the reversal at. Now, if 16.9K does break, we do have the 1.618 at around 14.7K. At that point, it could just retest these levels of resistance as support at around 12 to 13K. That is possible. I do not think that's as likely. Reasons being because if we already are in this wave 5 to the downside, I don't think it makes sense for it to be super long because we already have this extended wave 3 downwards. I think it makes sense for this wave 5 to be closer to equal in length as this wave 1 right here, and then reverse back to the upside. Another reason why I don't think that Bitcoin will head all the way down to around 12 to 14.7K is because you have people like Jim Cramer saying that Bitcoin's likely to go to $12,000. This dude is notorious for making the wrong calls. As in this tweet right here, you could see that ETH was around close to $3,000. He was calling for a 35 to 40% move to the upside, saying that he loves Ethereum. He's a big believer in that, and it went negative 55 cents. So I really don't think that this guy will be right. I think it makes the most sense for us to be nearing a bottom very soon. 16.9K to wherever we are right now could be a potential bottom level, but in the worst case, it could get down to these lower levels. So now I wanted to go over with you guys what stop loss hunting is, and this is when institutional traders will look to have their buy orders where majority of retail will have their stop loss. The reason they do this is because it provides liquidity for them. When you are an institutional trader, it is not as easy to get filled on your orders as it is for us retail traders. They are trading with so much more money than we are. So they're looking for these areas where they can find liquidity at before they think the price will reverse back to the upside. So they will look for key areas which people have their stop losses. So under those levels, they can find liquidity. So if we're looking at that on the Bitcoin price chart, you can see that this would be a key area of support for most classic technical analysis traders. They think, okay, well, if I'm going to long Bitcoin right here, this is going to be a key area of support. If it breaks through that level, this thing's just going to dump to the downside. But if we do take a look below that level, there are more key areas of support down here. So I think that it makes sense that we could have some stop loss hunting going on right now, where maybe price kind of falls lower in the short term because you have all these stop losses getting triggered, but that does provide liquidity for institutional traders to buy this thing back up. And this is just that X wave back to the upside, and then we get that reversal, but then it still does head towards lower levels. So I think that that is something that we should be paying attention to when looking at the Bitcoin price chart. So now we have a few reasons which are telling us why Bitcoin could bottom in the short term, because in both of these Elliott wave counts, it's showing that it is putting in this wave W before tracing back up for wave X. You have Jim Cramer calling for a $12,000 Bitcoin. We could have some stop loss hunting going on where all these stop losses are getting triggered below the previous all-time high, which provides liquidity for institutional traders to buy this thing back up at these lower levels right here before sending the price back up for this retracement into these levels again. And so that's 3 reasons. Now for the 4th reason, if we take a look at the fear and greed index on crypto right now, you can see that it is at 6. We are in extreme fear. Extreme fear does not last for so long. The market is driven by greed and fear. When there is extreme fear, you should be greedy, and when there is extreme greed, you should be fearful. So right now, if we take a look at the Bitcoin price chart, we are in extreme fear, and this thing is oversold. So those are 2 different factors which lead me to believe that we should not stay in this area for too long before we get that retracement back to the upside. Historically, this thing never stays too oversold for very long, and it hasn't really been at this 30 level much on the weekly time frame. You can see every time it did hit those levels, we did get these retracements or a reversal back to the upside. So we are extremely oversold. We're in extreme fear right now. Those are 4 different reasons why I believe that Bitcoin could reverse back to the upside very soon in this target area from 16.9K to around 21.7K. Obviously, it did break through the first target area, but I think anywhere in these lower areas of support, we could see a reversal. In the worst case, this thing could fall down to around 12 to around 14.7K. Not as likely. I think it's more likely it reverses before 16.9K, but it is possible. We do have to look for all possibilities here. So that is my outlook on Bitcoin right now. I do think that we are approaching a bottom very soon before this thing retraces back up to wave X. Now, once we kind of get a confirmed bottom, in my opinion, I will release some target videos for that wave X back to the upside. Now I'm going to go over some alternate accounts that I am looking at. If we are in this cycle wave 4 correction right now, we could be in a triangle pattern. So this would be brutal because we just go sideways for the next 1 to several years. I mean, I think it would probably be more like a 1 to 2 year correction for this wave 4. And basically it's putting in this wave A to the downside before it retraces back to the upside for this wave B, and then down for wave C, up for wave D, and then down for wave E, and then this thing would send it towards all-time highs. So this is a possibility. I do not think that this scenario is likely, and the next scenario I don't think it's really likely either. I'm going to explain my reasoning for that. Here's another scenario we could look at where maybe this cycle wave 4 is in some type of flat structure. These are all possibilities. I do not think they're as likely to occur as either of these counts, and I'm going to explain my reasoning in a minute. Here's the last scenario that we could look at where maybe we do have this 5-wave structure to the upside for primary wave 1. It is correcting for primary wave 2, and maybe this double zigzag to the downside just completes the wave 2 before this thing goes up for wave 3 to the upside. The targets are anywhere from 10.7K to 17.3K, and then we can get that massive wave 3 upwards. Now, I'm going to go over the reasons why I believe that neither of these scenarios are likely. Now, the first reason that I don't think that the scenario is likely is because you have this thing lasting around 1,000 days, whereas this primary wave 2 would only last a little over 200 days. So that would mean that this primary wave 1 was 5 times longer than this primary wave 2. That is highly unlikely. They're more likely to be closely correlated in time. Now, the next reasoning is because if we go on the weekly time frame, you can see that there is extreme bearish divergence from the extreme of wave 3. to the extreme of wave 5, and then you can see on the RSI it does make a lower high that indicates that the trend was changing from an uptrend, making higher highs and higher lows, into a downtrend, making lower lows and lower highs. If we take a look at this previous low down here, there is no bullish divergence on the RSI, and even when we do go on the daily time frame, there is no bullish divergence from wave W to wave Y, or even from wave A to wave C where it's at right now. So this shows me that any retracement back to the upside is just a dead cat bounce before this thing does head lower. Now, the reason I don't think this scenario is likely, where it does play out a flat for cycle wave 4 or a triangle for cycle wave 4 for Bitcoin, is because my count's in the stock market right now. I believe that we are in this primary wave 2 to the downside right now, where basically it's putting in this wave W, back up for wave X, then down for wave Y. That is on the SPX. If we take a look at the NASDAQ, doing the exact same thing, where we are in this wave W, it's bottoming out very soon, back up for wave X, down for wave Y. And then if we take a look at the Dow Jones, doing the exact same thing, where we are putting in this wave W between 27.9K to 29.7K, and then we get this retracement back up for wave X, and then it would go down for wave Y after that. So all of these counts are showing that we are just putting in a wave X before down for wave Y. So I think that that's what makes the most sense for the Bitcoin price chart, where this thing is just putting in a wave X once this wave W is complete, and then still does head towards lower levels. So that is the reasoning why I believe either of these counts are more likely than the other counts, where we are in this double zigzag structure for either cycle wave 4 or for primary wave 2. I do think that we should be seeing a bottom fairly soon, and then we could see a retracement up for wave X. Depending on which level it bottoms at, it will adjust those wave X targets. We're at least looking for a retracement back up to close to 30K. It could even hit as high as above 40K again for this wave X. This would turn majority of people bullish on Bitcoin again, and then it would just send it back down towards lower levels for that wave Y. So that is kind of my outlook on Bitcoin right now. I do believe that we should see a bottom from where it's at right now to around 16.9K. If it does break those levels, we could see around 12 to 14.7K. I do think it's more likely that we do hold this lower area. First reason being, we have Jim Cramer calling for a $12,000 Bitcoin. The chances of this guy being right are just so slim. The next reason is we are already in extreme fear. This thing is at 6. We are extremely oversold, and I believe that right now we are just doing this stop loss hunting, where institutional traders are getting liquidity from all these stop losses getting triggered before this thing retraces back to the upside. I don't think that it makes sense to go much lower than these areas of support before reversing back upwards. Also, 3 of my counts on the stock market are showing that we should be putting in a wave W in the coming weeks, and we do get this massive wave X retracement, which should be a several month correction for both Bitcoin and the stock market. I do believe that it makes the most sense we are approaching a bottom sooner rather than later. That is going to be it for this video. If you guys want me to make videos on the altcoins, kind of correlating them with my Bitcoin counts that I just presented to you guys in this video, let me know down below. Let me know which one you guys want me to do first. XRP is definitely on the top of the list. If you guys enjoyed this video, smash that like button. Make sure you're subscribed so you can get alerted for amazing setups just like this one. Have a good one.